What's up, everybody? Welcome to Crypto Cornucopia, where you come for the latest crypto news, education, and a path to prosperity in a compact format. I do hours of research so you don't have to. As promised, today we're going to talk about the terms that you're going to come across when you're doing your own research. But first, before we get into that, we're going to take a look at what's going on today on Trade the Chain, which scours Twitter and social media for sentiment of specific tokens in the overall market. We can see that Bitcoin daily sentiment is at 57. This is neutral. This is good. We don't want bearish. And sometimes if there's too much, if it's too positive, that means that we could be expecting a pullback. Ethereum daily sentiment, the same thing at neutral. And the hottest on Twitter are Troy, Tomo, Sand, Axie Infinity, Flow, STX, XHV, and CTC. Now, I only know two of these right here, so I wouldn't even talk about any of the other ones. But Axie Infinity is one of those play to earn games. I saw it at $7. It went all the way up to 140. Yeah, I'm kicking myself. Sandbox, that is, think of Ready Player One. It is not virtual, but it is an area where they're selling land and building upon it, and you can actually go into that world. It's called a metaverse. All right, so moving on to Market Rebellion, we're taking a look at the charts. We're seeing a pull back across the board on the major tokens that I like, with the exception of Bitcoin. Now, what does that tell me? That means that Bitcoin is most of the market. If you take a look at CoinGecko and the market cap, the total is 2.4 trillion. And Bitcoin is 1 trillion. Okay, so it is a big majority of the market. That's why when Bitcoin moves, everything else moves. However, if Bitcoin's really taking off, people will take profits out of their smaller cap coins and put it in Bitcoin because they know everything else is going to stay stagnant. And we can take a look at everything else right now. So it's at a great price point of 55,000, and we'll go into real quick after this why that's important. But everything else you can see on the 24-hour, there are only a few. Everything else is stagnant here, but there are only a few like XRP. They got good news coming in for them, and everything else is kind of down a little bit. Okay. All right. So moving on. One thing that I really want to talk about, CryptoMo. I can understand why people wouldn't want to even try with technical analysis, but I like going to him because I started watching him a few weeks ago, and all these lines that he's drawing, he explains what they are and why it's important, and he's been calling it out. So I'm watching him to see exactly what's happening, right? And I watch the market like him. For example, this is called a wedge. And a few days ago, he said if we go below this line, which is under the wedge, then other people are looking at this. They could sell Bitcoin. It can go down. He said, however, if it does go up and close above this top trend line, then it's going to be going up. So some of the they call it a target, which is next, is this next trend line up here at about 63. So we could see possibly going up to 63. So I'll be watching that for the rest of the week. But most likely, this resistance right here, this is where he topped out last time. This is where it might stop. If we break through that, we're going to see some fireworks. All right, so moving on. That is the market update. I'm going to be showing you a video, releasing it, that is phenomenal for an overview of Bitcoin and why is really the future. And not just Bitcoin, but cryptocurrency and the technology, blockchain technology as a whole. So I'll be dropping that video at the end. All right, so let's move into the terms here. All right, I'm just going to go through it. There's not a lot to explain here, but I will explain some things because it will need it. ATH, all-time high. Now, people don't really use that term, but you'll see it if you're ever reading in documents and white papers or just articles. They'll use ATH. That means all-time high. CFI is centralized finance, basically banks. And the reason that everything in cryptocurrency is decentralized, is that means it's for the people. Okay, centralized finance. Question of the day: how much of an interest rate do you get at your bank? I want you to put it in the comments below. You might not even know. Okay, better yet, tell me if you get better than 1% in your bank where you hold your money in centralized finance. I can tell you places um, that I use are 5% plus, and that's just by keeping it in there. And you can even use stable coins, which we'll get down here at the bottom. Decentralized application is a DApp. Okay, so these are applications built on layer ones like Ethereum to provide a service or function. DCA, this is how I started, dollar cost averaging. I took money on a weekly basis and I put it into tokens. After I did research about them, I felt comfortable about the project, I put some money into it. And I have 10x the money that I started with dollar cost averaging in May of 2020. DeFi, decentralized finance. This is the future of finance. And yeah, you better believe that banks don't like that. Aave is part of DeFi. Aave, you can put your stable coins, which is pegged to the dollar. You can put different tokens in there. And not only will they allow you to loan out up to a 60% value, they will give you interest as well. So just by having money in there, they can give you 3% interest. And then the loan is only 1%. So you're making 2% by taking out a loan. Of course, there are risks involved. You have to trust that nobody's going to hack this. You have to trust that nobody's going to run away with the funds. But most of the money that is made by Aave goes back to the people. It's reverse. Banks, they take almost 100% of the money that you give them and then go make money off it and give you nothing. This is just the opposite. They give you most of the money that's made and then they take some profit out. This really was the point of cryptocurrency and why Bitcoin was made. DYOR, do your own research. I'm going to say that all the time. FOMO, fear of missing out. You'll see when things get into a ridiculous state that a lot of people will buy in at the top. Like, wow, this is really moving now. It's not sideways. It's actually doing something. Unfortunately, when they have FOMO, they don't really understand the market and they tend to lose out, which is one of the reasons that I made this channel, is to educate. FUD, fear, uncertainty, and doubt. So this has a negative connotation, but all it is an adjective. It's just describing what, let's say, an article will do to the narrative, to the situation in crypto. For example, China has banned Bitcoin about 10 times. Go Google it. You can see that they have banned it several times, but it's a story that they just put out over and over and over. For what reasons, I don't know. But that creates, an article like that creates fear, uncertainty, and doubt about the market. And if you know anything about markets, it's all emotion. All right, so HODL, that just means hold on for dear life. That's holding and not selling. And if you're an investor, this is what I suggest you do. You DCA, you dollar cost average into the projects that you like, and then you just hold on to it. Now, right now, we're in a what they call, and we'll get to that, a bull market. Down here, it's positive. But a lot of people will say that we're going to go down into a bear market at the end of the year, which is why I always say time is of the essence right now. Learn as much as you can. Start dollar cost averaging. All right, KYC, know your customer. Any centralized entity in the United States has to do KYC. They will ask for your license. They will ask for your address. They want your information because the government wants to know for tax purposes what's going on. And this is why that's centralized finance, by the way, banks, exchanges. That's why a lot of people in the crypto space like decentralized finance. You can go into Aave, they're not going to ask for your information. They just have your tokens and you can take out a loan on it. If the loan for some reason is overextended, then they'll liquidate. It's simple as that. They're not asking for your information. It's just a contract that says you can do that and you can take it out whenever you want. They're not going to ask for your KYC. They're going to ask for your information. NFT is a non-fungible token. So most tokens, most cryptos out there are fungible. They act like dollars. They're interchangeable. Okay. NFT, non-fungible tokens, are tokens that are specifically one of a kind. And essentially, I think that this right here is the future. DeFi, that has a lot to do with what's going to be happening. But non-fungible tokens, you're going to have car loans. You're going to have Carfax is now going to be a token. You can use this technology to track items from from manufacturer to the warehouse to your table. They're doing this with wine because wine is the #1 product out there that is being not only stolen, but also they make fake, relabel it, take the real one, sell it for more, and then send the fake one off to a restaurant that's order it. With this technology, you can't do that. All right, POS means proof of stake. We talk about blockchain, and every block is created, and then whatever creates that block is rewarded. Well, proof of stake is you putting your tokens into a project, staking it, and they use those tokens to create the blocks. We're not going to go too much into that, but I am going to give you, if you do want to take the course, there's a free course on Udemy that tells you about blockchain, exactly what it is. And I do suggest you do that. You want to know what you're doing. Knowledge is power. POW, proof of work, that's Bitcoin. The work that's involved is the computer that you use to calculate the answer for a very hard mathematical problem. And the first one to do it, the fastest computer that does it, is going to get the reward. It's going to get the Bitcoin. Now what happens is you have a pool of computers that are all working at the same time trying to fix it. So what happens if they earn the Bitcoin, then they split up the Bitcoin among the pool. All right, TA, technical analysis. That is what I was showing you earlier. Looking at the bars on the chart. For example, if we pull this back up here, these bars represent emotion. Let's say take this bar right here. Okay, so what happened was it went down, which means that there was fear. Then it shot back up, which means that after the fear, people chose to buy in, which means that that's a bullish sentiment, which means that, oh, the price went down. Well, I want to buy at that point, and it shoots back up. Then it levels off. Okay, and I don't know all the terms for this, but as you can see, right after that, it shot back up. So that candle itself is a bullish candle, and people saw that and said, okay, I want to buy now because the sentiment in the market is bullish. All right, and that in its essence is technical analysis. You're looking at the emotions of the market that's represented by a bar chart. All right, those are the acronyms. Now we're going to get into full-on words here. All right, altcoin, very simple. Kind of annoys me that they don't have a better term or they still use this. It's anything other than Bitcoin, the original coin. There are 9,000 coins. Yeah, so let's not call them altcoins anymore, just because it's other than one other coin. Yeah, the 8,999. But that's what it means. So when you talk about altcoins, all it means is that it's anything other than Bitcoin. Bearish, you're going to hear that word. It just means that it's a negative outlook. People think that the price go down. Bullish, it's a positive outlook. Oh, cool little fact. Bearish, the reason that they use that word is when a bear attacks, it slashes down. So it has the claws up in the air and it slashes down. That's bear. Bullish, when it attacks, puts the head down and then raises the horns, it goes up. So that's positive outlook. Blockchain, You're going to hear this all the time. All right, it's a digitized, decentralized, public ledger, typo, of all cryptocurrency transactions. Every time they create another block, that continues the blockchain. You create a block, you've now created the chain. So imagine the information that is stored in every single one of these blocks. Bitcoin was started in 2009. Okay, all that information is stored in that block. Imagine that. It's hard to wrap your head around. All right, the difference between coin and a token. There actually is a difference. People use them, cryptocurrency, coin, token. They actually all mean different things. All right, so a coin operates independently, while a token has specific uses in the project's ecosystem. Okay, so a coin is the native, which means that, like Ethereum. All right, and a token means that something is on top of it and it's working on a specific use in the project's ecosystem. All right, degen. I am a degen. Oh, that's funny. That's not correct. All right, degen is anyone looking for high yields. Okay, so if you're just an investor, you can dollar cost average into your top 10. Bitcoin, Link, I would not suggest Litecoin, but any of the top 10 that's not a stable coin, use dollar cost average into each of those in any rotation that you want, and we're going to be going over that in the future. But degens, they go out there and they look for the high gains. For example, let's look it up right now. See how we're doing. SRK. It was one of the first tokens I ever bought because I watched on a video. I bought it. Down here. It was less than a penny. And it shot up to 25. It was a 32x. So you don't have to put a lot of money in to make a lot of money. You just have to do your research. All right, a fork is when a blockchain splits into two separate chains. Okay, and this is possible, but what happens is only certain people stay with that separate chain. So Bitcoin Cash did that. Bitcoin Cash is a fork of Bitcoin, and the reason that they forked off is they had different ideals. They're doing different things with Bitcoin Cash, but the people that believed in Bitcoin did not go with Bitcoin Cash. All right, so gas fee, that is a charge for a transaction. Layer 1, Layer 2. Layer 1 is a settlement chain, or the original chain, and then everything else is built upon it. So Ethereum, okay, is a Layer 1. Layer 2 is a scaled solution that uses different technology to group transactions and settle on Layer 1. So Ethereum has its own technology that it's using. They don't want to change it, because if they change it, then problems can happen. And then, so Polygon created its own technology that essentially takes a lot of transactions and processes them all in one batch and then sends them over to Ethereum. Okay, and because they do it that way, it's a lot cheaper. The only thing is a lot of tokens, a lot of cryptos are not on Polygon. Several are, but not as many as are on Ethereum. And then the market cap. That's the only thing that matters. The total supply times the current price. All right. Always look at the market cap. If you have a market cap under 100 million, that is a small cap. Okay, because that can easily go to 1 billion, and that's a 10x. All right, that video went longer than I wanted, but that information was necessary. And in the future, it will be less than 10 minutes. All right, guys, I'll see you tomorrow. Enjoy the info.